Good morning, guys. A warm welcome to you here. This is the opening bell. It's now 1 minute after 9. Start of a new trading week. It is the 30th of March. It's good to be with you guys here. Guys, before we do, continue, remember the information we discuss, is opinion and should not be construed as advice in any way. So we are here. We are at the end of our March month, the third month of the year. As mentioned to you guys, we are steamrolling through the first quarter of 2026. So what's happening at the start of this new trading week? Well, Iran wars continue. It's week 5. Oil prices have rose sharply this morning. And obviously, the supply risks, the attacks, and more countries are getting involved. There's actually no clear end to the conflict at this moment in time. We're seeing the rise of Pakistan coming in as well, wanting to hold some peace talks between the countries, mentioned and involved in the war. And due to the rising oil prices, we're not really, steering away from what is happening. We're seeing that the dollar is gaining a bit of strength there. And we are seeing some of the stock markets take quite a bit of a hit. And we want to try and see what happens. So let's maybe kick it off with this week strictly on FX. We have the NFP this week, the non-farm payrolls. It is a short week. We have a 4-day week. And we are looking at the labor report for the labor market. And at this point, the US technically is still stable. Low layoffs, low jobless claims, but the momentum has weakened in what many economists are actually calling now the low hire, low fire environment. Very interesting one there. So companies aren't firing aggressively. And this is obviously because of the oil prices, guys. But they're also not hiring like before. Oil has obviously jumped between 45 and 60% in a month, guys. And some of the economists over at Goldman Sachs have said that they estimate that 10,000 fewer jobs are added per month due to the oil shock. And we could see by mid-2026 an unemployment rise to about 4.6%. So it's gradual erosion. It's not sudden layoffs. And obviously, we know that, with higher oil prices, businesses face higher costs like transport, manufacturing, food, logistics. They all get more expensive, right? And companies respond by cutting, hiring, delaying expansion, and fewer new jobs are obviously created. So what does that then mean in terms of what sectors are being affected and what we're looking at this week? Well, the job market is not equal. We do know that across different industries. The hardest hit consumer-driven sectors is leisure and hospitality. These are there where you find the biggest losses so far. You have your retail, we have the restaurants, we have entertainment. Those are the biggest ones. These depend on disposable income, which oil prices reduce, all right? And the more protected sectors are your healthcare, your housing-related services. These are essential spending areas, all right? So one thing that we also need to understand and maybe answer here this morning quickly is why the oil boom isn't creating many jobs. Well, normally high oil prices equals more energy jobs, but not this time, all right? We're having the US oil companies that are now highly automated and efficient, and they're not hiring as aggressively, even with the high prices. So the usual oil boom, which is job boom, effect is much weaker this time around. So, we're seeing that play through now really, really hard, and we want to see if that is the case this Friday. So we looking at the Euro USD first, because like I said, we're going to be dealing with a bit of FX tomorrow. We'll deal with the stock markets. We can see the Euro USD is coming from a swing high. We've now gone in to that swing high. We have a weekly look at this. We saw that last week we rejected those highs. We saw a bit of a stronger dollar there against the euro. And obviously, again, it's due to the oil prices here at this point. So we saw a bit of retraction from those highs over there, and we want to see if it's going to be sustained this week. So it's open quite flat here. Look at this, quite a flat open. From a daily perspective, you can see today it's really uncertain right now. We have a wick at the top and we have a wick at the bottom with a little bit of a body here, and it's a bit uncertain whether we are pushing to the upside or whether we're going to be continuing the move to the downside. I think we're going to give it today and see what happens. We do know that Trump is in a very peculiar place. Him that started the war with Israel is now obviously more on the diplomatic side, it seems, trying to have some form of peace treaty, but Iran's not having it. And so this is obviously going to, this by definition of war, or at least from an equation perspective, this should escalate. We don't know to what degree it will actually escalate, but it should escalate so that we can have some form of outcome. The escalation could be, like what we've seen in the past 5 weeks, or it could be peace talks. We don't know at this point in time. That's the thing when it comes to wars. I believe you can check it out. There's a bit of a window there. 6 to 8 weeks is what they normally give for a war to die down, or at least peak and then come down. Very interesting. Some may differ, obviously depending on the context. But it's been 5 weeks now. So let's see what happens at the start. We're looking at the oil price. So remember, it's correlating. We're seeing the Euro USD just push in that sideways kind of pattern. The oil price has surged. You can see it here this morning. We reached roughly around the 108 dollars per barrel, and this is actually just continuing where we left off last week. This is the high of last week. Look at that, right there. We opened. A bit of a rejection at 106, and we're pushing back up. So I do think we're going to push up a little bit here to the 110 area, and we're going to see how that goes. Obviously, we're also looking at the Japanese yen, guys. Let's not forget the FX here. All right. So from a yen perspective, we're seeing that there's a little bit of a difference there with regards to the strength. All right. So let me give you some information here. We did see a bounce back in the yen. There's obviously a lot of government warning of intervention. The weak yen actually caused by high oil import costs and loose monetary policy. We had officials stepping in, and the intervention risk equated to sharp moves, or is equaling to sharp moves possibly. And so the yen could strengthen suddenly. So please have a look at that. You can see we have created a major swing high today on the intraday chart. This is the 1 hour. On the daily frame, you can see that there's no swing low, guys. We actually looking at a bit of a rejection here. Look at that. So on the daily side, remember, this is a monthly period right here. This is the entire month of March. So at the end of March, we have a swing high here. And so we may be coming down a little bit here because of the government intervention and what the closing of the strait has done in the economy of Japan. All right. So please make sure that you actually watch out for this possible short here that could come even today or tomorrow. We have to watch it very carefully. You can watch the 4 hour and even the 1 hour on that and look for your clear support areas. Example here is a clear support area right there. That's the start of today. That's the Asian session. And then we have the key area here. That's the Asian key area for today. So watch 159.43 if you'd like to check out the yen. And then obviously, I'll be going into gold and to silver a little bit more detail later on in the week. But just a quick overview on it. We are seeing that, well, I've seen that the gold has also started off pretty strong, in a decline or bearish kind of reaction. And then after that, we proceeded to push up. So we created the low in the Asian session, and now we have actually started the London session now, and we've created a high in the Asian, which was about an hour ago. So let's see if we break that specific area. Maybe just a little bit on gold there. It's very volatile right now, but it's still below recent highs, and it's giving us a bit of mixed signals because it's a safe haven. Remember that. It's a safe haven. It's a support for investors. The higher rates is the pressure here for gold. All right, so we're going to look at the job report on Friday, then we look at the CPI, and we're going to get a little bit more clarity on that. But expect a lot of choppy price action from gold at this point. And obviously, silver, we cannot leave it out. Also, very volatile. It's down about 30% from those highs. The rate hike expectation is rising. And obviously, industrial demand is still a concern. We have a lot of war uncertainty. So it's a little bit weak overall at this point in time. When I say weak, I'm referring to the actual push from this high here. That high is very key right there. And we've pushed down considerably to this low at 66. All right. So it's a little bit more sensitive than gold, guys. There's bigger swings in the silver price at this point in time versus the gold price. And I'm referring to structure now. If you look at the daily frame on the silver, and let's go to the gold, you can see these swings on the gold price on the daily is not as really big, or it's not bigger. It's not really expanded as much as the silver price. Look at that. I'm going to do it one more time. Look at the gold, and then look at the silver. So it's really more expanded on the silver structure than you see on the gold structure. All right, so we'll start off with FX today because we know we are looking for the job report coming in, and we know the major pairs are affected by the NFP. Watch out for Wednesday. We have the ADP coming out as well. But we will definitely give some more, updates and so forth as we do go along. We'll definitely give some more updates. For this morning, though, we're seeing a dollar that came out swinging. We want to see if it's going to be sustained today. So watch out for all the breaking news. If anything is said today, watch how the dollar performs. All right. That's it from me this morning here, guys, for the opening bell. If you'd like to open up an account with us, don't forget to visit www.tdmarkets.com. You can also email us at care@tdmarkets.com. That's it from me this morning. Have a fantastic start to your Monday. We're going into Easter. Guys, have a fantastic one. For the guys that are going away for the whole Easter, all the best, all right? But we will be back, and we will have a trading room tomorrow where we'll deal with some of the technical structures that we're seeing here that could be beneficial for us this week. All right, have a good one. Ashley Reeve, guys. I'm signing out for this morning. Ciao, ciao.